Hi, it's me again. Right, today we're talking about critical illness cover, also known as KIC, also known as serious illness cover or SIC. Whichever way the insurer prefers to call these products, in essence, it means exactly the same thing. It's an insurance product that will provide a one-off payment if you are diagnosed with some very serious condition like heart attack, cancer, stroke, and so on. Often these insurance products are sold in conjunction with life insurance, and some people might even say, well, KIC is just a part of life. It's not. You can actually buy that policy as a standalone product as well, and you will have a separate policy number for it as well. So no, it's not part of life. It's a standalone insurance policy. Do I like KIC? Not really, and I will later on explain why, but let me cover the basics first. So with KIC, there are two major factors that affecting your price. First one is obviously the amount of money that you want to insure yourself for, which is known as sum assurance. And the second one is the duration of the policy, or how long you want this policy to last. This is where life and KIC are very similar, because most of the providers are happy to offer KIC up until your 67th birthday. So yes, these are also a long-term policies. It goes without saying that the older you are, the more likelihood of getting some very serious medical conditions, and obviously your age also affect the premium. So with KIC, the major thing that you need to understand is that there is only a predefined list of conditions that will fall under this policy. So yeah, if you had a horrible food poisoning after a dodgy takeaway and you think that this is serious, trust me, it's not, because the insurers will only have that specific list. And by the way, each insurer will have their own list with own terms and conditions. So that's why I'm always saying that, if you're thinking about buying these policies, you're better off speak with the brokers, because they should have, at least in theory, know which insurer is offering what, which conditions and so on, and what's going to be suitable for you. So I hope that's clear. Right. All providers are offering really two options of KIC. You've got your basic one and you've got the extended one. If you think that the list is huge, think twice, because the basic KIC will cover roughly between 30 to 50 conditions, and the extended version, which will cost a little bit more, will add an extra 30 to 50 conditions on the top of that. However, what most brokers aren't telling you is the fact that on that extended version of KIC, these conditions that are going to be listed most likely are not going to be providing the full payout, and they will only pay a percentage of the sum assurance. Let me give you an example. If you're diagnosed with a stage 3 or 4 cancer, then yeah, of course you're going to get the full payout. But if you are diagnosed with a stage 1 cancer, or the severity of that serious condition is small and there is a huge likelihood of you being treated and discharged, then most likely you're only going to get up to 25% of the sum assurance. So if you covered yourself for 10 grand, you're not going to get 10 grand. You're only going to get 2.5 grand. Not only that, but there will be a specific terms and conditions listed for each condition within the policy pack, or also known as policy wording. And let's be honest, none of us really read the whole thing from A to Z. And even some brokers don't read the whole thing. Anyway, let me show you what I'm talking about. Here is the policy wording from Legal & General, who's one of the largest providers on the market, and this document lists all of these terms and conditions that I'm talking about. What do we see? Right, blindness is a permanent and irreversible loss of sight. This definition does not cover temporary blindness, and by the way, none of these insurers are specify what temporary means. It can be a few days, few weeks, few years, who knows. And you will only get a payout if your vision is 6 out of 60 or worse in your better eye. What does it mean? If you've ever done an eye test, you know that the optometrist asks you to read the letters on that chart, going from, huge letters on the top to impossible to read on the bottom. So basically, if you can read the top line of that chart, then that means that your vision is 6 out of 60. In other words, this means that you can see at 6 meters something that person with a standard vision could see from 60 meters away. Going back to our policies, if you can read the second line of that chart, then basically you're not going to get a penny on your critical illness cover because you're not blind enough. And as you can imagine, every single condition listed within that policy wording will have its own terms and conditions, which in essence help the insurers to reduce the amount of eligible claims they pay. That's why I'm not really a big fan of KIC. Saying so, I still think that it's worth considering KIC. And some brokers out there will try to sell you a KIC for the amount of mortgage you have, which in all fairness, yeah, I can't blame them, because it's a good idea if you are diagnosed with some serious medical condition, the mortgage is paid off and etc. But the harsh reality is that the average house in the UK now worth about 300 grand, and having a KIC for 300 grand will cost quite a lot of money, which, let's be honest, not many of us can afford. So if you have a specific budget in mind, then in that case, instead of taking a huge kick, consider taking alternative covers for exactly the same price, but will cover slightly different things. What I mean is obviously take life insurance to cover the worst case scenario, but that's not really going to break your bank. Consider taking private medical insurance, but if it's outside of your budget, it's outside of your budget. Definitely consider taking IP or income protection, and this is the type of policies that I'm going to be talking about in my next video. And if there is still budget left, then yes, consider adding kick. But if the budget is tight, then when you're considering the amount of cover and the duration, I would say that cover yourself for a 1 year of your net earnings, i.e. salary that you're taking home. Because at the end of the day, these policies, the payouts on them is tax-free. Why 1 year? Well, because 1 year really should be enough to, treat the condition that you had and perhaps adapt your lifestyle if the condition was quite severe. Basically, what I'm trying to say is that try to prioritize what truly matters to you and think rationally. What is there and why do you need that cover? I'm always asking the same question, why? And that's really the question that you need to ask yourself as well. That's all that I wanted to say for today, apart from one thing. I'm trying to grow this channel, so yeah, please like, subscribe, and leave a comment. Apart from that, I will see you in the next one.